Good morning, everyone, and welcome to TBR's webinar, Which Vendors Achieve the Highest Margins in TIS in 2012? Insights from TBR's 2012 TIS Margin Benchmark. My name is Allison Crawford, and I will be your host for today's session. As Chris will explain, the TIS market is growing, and there are myriad factors shaping this market and impacting margins across the board. Our research into these drivers and their impacts enables our clients to better prepare to compete, reducing risk and improving margins. This benchmark is a business necessity for vendors of any size selling telecom infrastructure. Before this, I hand this over to Chris. There are a few action items I'd like to cover with you. First, we will be recording today's session and posting it on our YouTube site, TBRI channel. We encourage you to visit our channel to watch this presentation or any of the others we've posted. Second, we'd like to hear your opinions and thoughts on the materials we're presenting. Please send any questions or comments to the Q&A or chat function. Chris will address them at the end of the presentation. Or, if you'd like to set up a client inquiry, please reach out directly to Chris at the end of the webinar to send up that discussion. Third, we'll send out the slides to everyone registered for today's webcast within 24 hours of the conclusion of the webinar. You can also find these slides, along with other thought leadership pieces, webinar decks, and commentaries on SlideShare at www.slideshare.net/TBR_market_insight. And I will share all the social media links with you at the end of the presentation. With that, let me introduce Chris Antlitz, Analyst on the Networking and Mobility team here at TBR. Chris has been covering the Telecom Infrastructure Services market for the past 5 years and guides the research on our TIS benchmark. His insight into operators and their competitive strategies have helped our clients improve their strategic go-to-market plans and improve performance. And with that, let me hand this over to Chris.
Thanks, Allison, and welcome, everyone. Before we jump into the results, I just want to highlight here what is this margin model all about. So we do a lot of tracking on the TIS market from a revenue perspective. We have increased our research into this market now, and we are doing margins. In this product that we're going to be discussing today, we're only talking about the top 5 vendors. These are the leading 5 integrated network equipment providers. And we're going to be looking at their deployment, maintenance, professional, and managed services businesses. The TIS market generates $9 billion in profit globally per year, and these 5 vendors represent 1/4 of that revenue. So we believe that they're a good proxy for the entire market. This product that we do identifies margin leaders, best practices, strategies, growth opportunities in the TIS industry, and it allows readers to compare and contrast leading vendors. How are they outperforming? Why are they underperforming? Evaluating segment profitability, strengths and weaknesses, etc. Pretty comprehensive report, and you'll be seeing all of the highlights from that here. So with that, we'll go to the next slide. All right, so jumping right in. These are the 3 key trends that we saw in the year in 2012. We have 2 things going on. One is restructuring. Each of those 5 vendors, Ericsson, Alcatel-Lucent, Nokia, Siemens, Huawei, and ZTE, are all in some kind of restructuring program, some of them in larger ones than others. So you have some restructuring going on to right-align the resources. And you also, on the other end of the spectrum, you have new services being created and some trends in the market that are driving growth in those businesses. One thing that we saw was a software focus really starting to emerge, and that primarily around the professional services, and that we've seen boost professional services margins for Ericsson and Alcatel-Lucent in particular. Getting into areas more in OSS, BSS, service delivery platforms, cloud, those are all areas that have relatively higher professional services margins than some of the traditional equipment SI. The second trend we saw for Alcatel-Lucent and Nokia Siemens, who are going through their transformational restructuring programs, they went through a full year of it last year, and we saw marked progress in their margins in 4Q12, and we're expecting much more progress in 2013 as those programs come to an end and they start to realize the full benefit of those cost savings. And most of that is from them exiting commodity-type services like field operations and field maintenance. There's a de-emphasis on those areas where there's low differentiation and very low margins. In their cases, most of those contracts are negative margin, and they're getting out of them for that reason. The third big trend that we're seeing is around deployment margins. This is typically an area where vendors do not make money, but they will sell their equipment. They'll deploy it as a freebie to sell the equipment and get their install base up, and then to sell more lucrative managed services, maintenance services contracts over that equipment. We are anticipating a -7 to -9% operating margins and deployment over the next few years, and that's really going to be driven by the resumption of European network modernizations this year, and then LTE deployments and some 3G deployments in emerging markets is also going to weigh on deployment margins. So jumping down deeper into professional services and what are the drivers here. On these charts, these are average professional services margins, gross and operating margin over the last 3 years. You'll notice that both operating and gross margin are both on an upward trajectory. And again, this is driven by an increased focus on the software C&SI. Ericsson and Alcatel-Lucent are outperforming here. Ericsson's made some acquisitions in this space that have been accretive to margins. Meanwhile, Nokia, Siemens, Huawei, and ZTE have been lagging in their software offerings. Nokia, Siemens actually exited their BSS business. They sold it to Redmi last year. They've also divested some other businesses that were non-core. And then Huawei and ZTE remain very focused on the equipment SI aspect of the network, and they are trying to catch up in some of the higher value software C&SI. The other thing that's contributing to margin rise in professional services is scale. We're seeing bigger contracts coming through for modernizations and systems integration, and those are helping vendors get spread their resources over higher revenues. So moving into the point number 2, the restructurings, just to highlight a little bit more there. Both Alcatel-Lucent and Nokia Siemens got good margin gains from 2011 to 2012. You can see the changes in gross and operating margins for each of those firms. All 4 of those categories rose year over year. We are expecting further margin gains in 2013. 1Q13 results were very good for both of those firms. We are anticipating strong margin gains for both companies in this year. It's going to be gradual improvement, though. It's not going to be like a huge jump in margin. It's going to be, there's a transition period for both of these firms where they are transitioning out of and de-emphasizing certain low-margin business. It's going to take a little while for those margins to really get to realize the full benefits of that transitioning. Both of those firms will complete their restructuring programs this year. However, Alcatel-Lucent, we're expecting them to initiate a new round of restructuring. They're actually going to initiate that next week when Michael Combs, the new CEO, unveils his plan. I believe that's next Wednesday. And then asset divestitures are also contributing to the TIS margin gains. Alcatel-Lucent is probably going to exit some businesses. They've made a move in 1Q13 to separate some of their businesses from their core business and put them into the focused businesses group, which includes submarine, strategic industries, the types of businesses that are not, they don't bring big margins to them, and they're not really core to their business, and we're expecting they're probably going to be looking to sell those assets. And then Nokia Siemens has already sold more than 5 businesses over the last 2 years as part of their restructuring, and that has all been accretive to their margins as well. Talking about deployment, so we've projected out 3 years. We're looking at range-bound 7 to 9%. The modernizations in Europe are going to finish this year, and then in 2014 and 15, the continued drag on the margins here is going to be driven by 3G deployment in emerging markets and some LTE deployment outside of the U.S. There's going to be LTE starting to spring up in China, and some of the other countries that have not started deploying that technology yet. There's a few factors that are weighing on margins here. Huawei and ZTE have been aggressive to get market share, particularly in Europe. And in order to do that, they've been throwing in deployment services, in some cases for free, to get their equipment in the field and to entice operators to purchase from them. So given that, the market dynamics and the new entrants in certain new different markets, there's going to be continued drag on deployment margins. However, the vendors are going to make up for that in the maintenance. And next slide. So maintenance, you went too far. Okay. So before we talk about the maintenance, we're going to talk about each of the services individually. Here we have the overall TIS margins, overall gross and overall operating margin for each vendor. So here we're comparing each of the vendors. Ericsson leads in both categories. They have solid execution, very good, well thought out acquisition strategy. Both help them to achieve best-in-class margins among these 5 vendors. So let me just clarify, we're talking about the five leading network equipment providers here. There are a bunch of other players in the TIS market like Cisco, Juniper, Tellabs, that we're not looking at here, but the dynamics and some of the trends that we're talking about are still applicable to their businesses as well. So we're using these 5 vendors as a proxy for what's going on in the broader market, in the TIS market. So Ericsson's leading. ZTE was the laggard in 2012. They really hit a snag in sales. Some of their core customers there were cost overruns in big projects that really impacted their margins. But we are expecting them to start to improve those margins this year. They got recapitalized by the China Development Bank last December, and they're going to use that money to streamline their internal operations and drive into some new areas and also build up their managed services business, which is a big strategic focus for that company right now. And then Alcatel-Lucent and Nokia Siemens, we're going to talk about that soon, but they rely heavily on maintenance to support their overall TIS margins because they are, their managed services businesses are both generating losses. So the maintenance services business is really carrying them and helping them to support their gross and operating margin overall. So deployment specifically, vendors don't make money here. If you can see across the board, nobody's making money here. It's all about, it's a loss leader. You sweeten the deal by throwing in the installation of the equipment, and that's getting your equipment in the field, which you can then sell the lucrative maintenance services contracts over. So the big drivers here, European RAN overhauls impacted some of these vendors. And then Huawei and ZTE, generally speaking, are putting downward pressure on pricing, and that the Western vendors have had to come down on their deployment pricing in order to compete. So this segues into maintenance services because while the vendors are losing money on the deployment of this infrastructure, they're making up for it, more than making up for it in the maintenance contracts that they're selling on that equipment. So if you can see here, these are very good margins. You're looking at 38% and up on the gross, and you're looking at solid double-digit margins on operating. Ericsson and Alcatel-Lucent lead here. Ericsson is leading. They have found a very good balance between on-site and remote resource to provision these services, and that has enabled them to get best-in-class maintenance services margins among these 5 vendors. And then Alcatel-Lucent also has very good margins in maintenance. Much of that is due to the fact that they are supporting a very large legacy base for both wireless and fixed infrastructure, and they're able to generate higher margins on that infrastructure because, you know, as it reaches end of life, many operators still keep it in use, and they require a vendor to continue to maintain that for them, and that they're able to charge better pricing on that to continue to maintain that legacy infrastructure. Huawei ZTE frequently need to offer discounts on maintenance services to entice operators to purchase their equipment over, say, a third party, or rolling it into a multi-vendor deal, which a different vendor would be provisioning the services on. That is owing to part of the reason why their margins are a little lower. However, Huawei in particular is getting better pricing power, and this is due to a few reasons that we think. One is that their market share is climbing, and they have greater market influence now in particular regions, growing influence in Europe, and that is helping them to exert better pricing power over their customers as they get that scale and leverage over their supplier customer base. So, professional services. Ericsson's big move into software through the acquisition of Telcordia, Tridge, Optimi, Encode, and Pride were all accretive to professional services margins. They are best in class of these 5 vendors. And then Alcatel-Lucent is a close second, who's also benefiting from this big push into the software and platforms. And then Huawei ZTE and NSN are all lagging here. They have weak consulting arms. I know Nokia Siemens in particular is de-emphasizing consulting. They're actually looking to exit consulting. Huawei ZTE have under-resourced and underutilized consulting practices, and they have not done a very good job monetizing those businesses, and that's all owing to their underperformance in professional services margins. Managed services, it looks like the charts are not showing. All of the charts we will have on the slide share, so you guys can go back and reference all of that data. And we're also going to send it out to all of you, so you'll have all the data, even though it's not showing right now. It must be a technical difficulty issue. But managed services, the only 2 firms that are getting positive margins here is Ericsson and Huawei. Meanwhile, Alcatel-Lucent, Nokia, Siemens, and ZTE are all losing money in managed services overall. There has been improvement in all of those vendors' margins over the last 3 years, and that is primarily due to a greater shift of tasks to remote GNOCs and also scale. Ericsson in particular getting very good scale. They are able to take on massive projects, massive outsourcing projects like Sprint, like they're doing Leap's IT outsourcing now. They've also got some massive outsourcing contracts in Europe. They're getting a little over 4% operating margin in 2012. Huawei was close behind. They had a little over 2% operating margin in managed services. Alcatel-Lucent really struggled. They had the worst managed services margins in 2012. They are in a transitionary period right now, so they're getting out of and de-emphasizing some of the field operations and field maintenance type contracts. They're also looking to exit some countries and implement a channel model. They're trying to find an optimal mix between on-site and remote services. They're still very heavily skewed towards on-site, and until they find that mix, that happy medium, which they are well on their way doing that from the performance plan which they've implemented, but they still have some work to go to get closer to the average margins experienced in managed services. And then Huawei ZTE, They're rapidly attaining scale. They are winning more and more managed services contracts, especially in developed markets like Europe. That's really helped them to get margin accretion there. Okay, so again, we will have all of this data will be in the slides we're going to send you. We're having a technical difficulty issue with the data showing, but I will interpret it for you. So overall, we are looking at the overall TIS market. Basically what we did is average margins for gross and operating. And so I'm going to read some of the data out to you. So for total TIS, average gross margin is about 23% across those 5 vendors, and average operating margin was 4.8%. We are expecting flat margin in 2013 because there's a few things that are going on that we're seeing right now. One is there's a weak pricing environment. Operators are increasingly asking for discounts, especially on maintenance contracts. That has been weighing down on the lucrative business for these vendors. And deployment is not going to get any better. Professional, we're expecting flat. There's been a lot of growth in the software over the last few years. We're expecting that to flatten out. Really, the only service area that we see growing year over year in 2013 is managed services, and that's primarily going to be driven by restructurings from Alcatel-Lucent and Nokia, Siemens, and ZTE now, and also scale that all the vendors are going to experience. A push to automation and pushing more functions to GNOC is also going to help be accretive for managed services margins. So that's us disaggregating each of the service areas. Overall, if we take a net of that, we're expecting average margins to be relatively flat from where they were in 2012. Okay, so before we jump into Q&A, again, we apologize for the text not showing. Everybody will have all of the text and numbers from all of these slides. We're going to send them out right after this presentation. Just to highlight, we do every quarter, the networking and mobility practice gets together, and we identify key trends taking place in the telecom market globally. 4 of the topics that we've identified and that we're looking very closely at are network function virtualization, LTE deployments, enterprise solutions, and consolidation. Those are just 4 areas that we're looking at very closely. So what we do in all of our benchmarks is we do individual vendor reports, and that data and information gets rolled up into our benchmarks at the end of every quarter, where we're looking at leaders and laggards, and we're looking at rigorous assessment of financial metrics, where we get this information from. So those 4 topics are the ones that we are going to be looking at and going forward in our reports, as well as many other areas that are ongoing that we're looking at. But basically what I want to highlight is that we are looking at all of the major topics taking place in the industry. That information gets filtered into our individual vendor reports, and then it gets lifted up into our...
Let me see if I can fix this.
Okay. And then it gets lifted up into our benchmark report. So that's where some of our... Okay. Okay, great. So we're just going to take a step back and go back to slide 13 just so that everybody can see. Yes, just so that everybody can see the data here. So this is, we're looking at average gross margin and operating margin in 2012 for the 5 vendors in this study. And also you can see the trends and the reasoning why we expect the margins to move the way they will in 2013. So maintenance, just from this dashboard view, you can see that maintenance and professional services really carry these TIS businesses for vendors. Managed services is becoming a greater, it's becoming more of a positive influence on overall TIS margins, and then deployment is going to remain a loss leader, but very critical for driving maintenance services in particular. Okay, so here's the text that we were referring to. So we go through all of the quarterly topics. It goes into our vendor reports, which gets lifted up when we do our benchmark analyses. And we update this every quarter. This is only 4 topics. We look at, broadly, we look at every single facet of this market. These are just highlighting the top 4 areas that we see as emerging and the big hot topics in the industry right now. So with that, we'll open it up for Q&A.
Great. And again, I want to apologize. Apparently, WebEx does not like PPTX files. It likes the old PPT files. So as Chris mentioned, these files will be sent out to you. If you guys have any questions based on stuff that you didn't see, please feel free to follow up with Chris. The first question we have, Chris, how much are ALU and Ericsson's high maintenance margins attributable specifically to their installed base of legacy equipment in the U.S. market as opposed to other markets?
So for legacy in particular, you got to look at really the developed markets. So U.S. in particular, Ericsson acquired their way into a legacy base by buying Nortel's CDMA business. So they got legacy contracts with Verizon and Sprint, as well as some of the CDMA operators up in Canada. There is a bigger mix of legacy in their mix in North America. And then in Europe, it's really about GSM and HSPA for Ericsson. And that has been a big contributor to keeping their maintenance margins high. The other thing is, I think we'll get into it in a little bit, but multi-vendor maintenance is another thing that is contributing here. Ericsson is able to take on legacy maintenance from other vendors. So operators will outsource maintenance, and Ericsson will wind up getting that as part of a spare parts management deal, or just a multi-vendor blanket managed services maintenance services contract. So they're able to get some margin from legacy off of that as well.
Okay, the next question that came through, are any TIS vendors making money, positive operating margin, on managed services or outsourcing agreements in the U.S.? Any perspective on Ericsson's relationship with Sprint?
Yeah, so for Ericsson, so these contracts are multi-year, and they usually start out at a loss. It takes a few years for Ericsson, just use them as an example, for them to pull a profit off of those multi-year deals. The other thing that Ericsson does a very good job at is upselling and cross-selling. So because of their very deep relationship with Sprint, they've been able to get a big position in network vision and some other projects that Sprint has brought to market. So we think that has helped them really establish themselves as a long-term supplier and service provider to those vendors that they have managed services contracts with. So they're an outlier in monetizing those managed services contracts.
Okay. The next question we have, do you see continued OpEx pressure from SP, I'm assuming that's Sprint, SPs hurting maintenance services?
Can you read that again?
Do you see continued OpEx pressure from SPs hurting maintenance services?
Yes, we do. So contract pricing for like-for-like maintenance services, operators are
service providers.
Yes, service providers are looking for discounts. We've seen from research that we've done, we have seen operators ask for discounts in excess of 20% from a year-over-year basis on maintaining the same amount of equipment. So what vendors have been doing to offset that is throwing in more maintenance services, so things like preventative care, and basically increasing the scope of the contract to keep the price level relatively the same, so that they don't have to eat these big discounts that operators are demanding. The other thing that's taking place in maintenance is Telmar. So third-party providers like Telmar and CTDI, they are also taking share from the Tier 1 equipment providers. They are, especially for spare parts and some of the more basic maintenance services, so break-fix, they are definitely taking share, especially in developed markets, from the Tier 1s. And they're also exerting pressure on the maintenance pricing because they're coming in at a lower price point, and then the Tier 1 vendors have to come down to that or walk away, or they need to offer a solution, a maintenance services solution that is superior to theirs, that they're able to generate that higher margin on.
We had a quick clarification question. The question is, that would be 20% from the previous agreement?
Yeah, 20% from the previous agreement. Those are extreme cases. We're primarily seeing that big of a disparity in Europe. European operators some of them are really struggling right now, and their cash flows are decreasing. In some cases, ARPUs are falling very quickly, and operators are really struggling there to right-align their OpEx with what they're getting in from cash flow. And in those instances, that's where we're seeing the most acute downward pressure on maintenance pricing.
Okay. Re Telmar and CTDI. How do you see TIS vendors managing the secondary market for maintenance and support services from Telmar, CTDI, and others?
Yeah. So the third-party guys are really good and have a competitive advantage in break-fix. When you look at more of the preventative care and some of the tasks that can be provided remotely, automation, self-healing, those types of functions, it's really about the Tier 1 NEPs, and they've been able to differentiate from those third parties by doing that. They're also differentiating by taking on multi-vendor maintenance contracts. So it could be spare parts, it could be field operations, those types of contracts, and they've been able to keep them at bay by undergoing those types of arrangements.
Okay, we had a follow-up. Also, how prevalent is the practice of service providers to segregate who they partner with for equipment maintenance? For example, use third-party like Telmar for legacy equipment repair and support, but stick with TIS OEM for new 4G network support, repair and support.
Yeah, there's a lot there. So segregate who they partner with. Okay. So it depends on the operator. Some operators will segregate the different technologies. Sometimes they will segregate a particular business line. So the wireless, the maintenance of the entire wireless network, the wireline network. It depends on the arrangement. We've seen the Tier 1 vendors come in and look for more holistic type contracts, like a blanket contract to cover entire sections or parts of the entire network. Whereas some of the third parties like Telmar and CTDI, they don't have the scale to really take on that type of a contract from a Tier 1 operator, but they are able to take over, say, maintaining the RAN in a specific region, or taking over parts of maybe an optical network. Those types of things they've been able to really compete in. So really, the Tier 2, 3 operators are really a good fit for these third parties because they have the scale needed to provide a good price to those operators.
Okay, we have another question. How do NEP MGS margins compare to those made by Tech Mahindra or Accenture on similar deals?
What was the MGS?
NEP MGS margins.
Okay. So Accenture and those types of firms, they're doing more of the ITO. They're doing some business process outsourcing. They don't really do the actual outsourcing of the network elements. So it's a little bit of a different business model, different part of the market that they're targeting. Margins on those firms' managed services business are typically higher than what you will see in the Tier 1 NEPs.
Okay. Next question we have, why haven't most vendors been able to obtain attractive multi-vendor maintenance margins?
Yeah, so multi-vendor maintenance, 2 years ago, there was a big movement in the market among the Tier 1s to do these multi-vendor type contracts. And basically what it is having one vendor take over all of the responsibility of all of the suppliers within a particular operator's account. They called it SPOC. I think Alcatel-Lucent coined the term. It stands for single point of contact. And basically they sit in between the operator and all of the suppliers to that operator. And they manage the suppliers. In some cases, they will take over the warehousing, inventory management, some of the break-fix functions, and they will take some of that away from the third parties. The problem is that it didn't work out as planned. Most multi-vendor maintenance contracts were not achieving the margins that were desired. Generally speaking, the margins on those contracts are below average maintenance margins, in some cases well below. Product-attached maintenance remains the most lucrative and most profitable form of maintenance service. With that said, Ericsson has really been the outlier here too, owing to their scale and their optimal balance between on-site and remote resource. They've really been able to extract a decent margin from multi-vendor maintenance, whereas some of the other vendors have not been able to find to figure out how to get that, to get those profits from that.
Okay. Next question we have, can you provide some additional color around why you think the pricing environment for maintenance services, particularly product attached, will remain weak?
Yeah, so it's really about how are the operators doing. You know, if your customer base is struggling, you know, how are you going to keep, you know, how it's going to affect your vendor base eventually. And we're really seeing that in Europe. I come back to Europe because there's really, I mean, I look at some numbers there on operator, things like ARPU, looking at leverage ratios, looking at cash flow. You know, some of the Tier 1 operators are really struggling. And they are needing to get these price cuts to, you know, to stay relevant in the market and continue operating in some cases. So it's really a necessity that they get some of these price discounts. And maintenance is a big OpEx item for these guys. You know, especially in Europe, they are having to maintain a lot of legacy infrastructure, both wireless and fixed. And that's costly. And that's an area where they can cut back on OpEx. They've been doing that.
Okay. What do you anticipate the impact of NFV will be on margins going forward?
Yeah, so NFV, and let's throw SDN in there too. Basically what's going to happen, and this is going to, you know, everybody's talking about those things. It's going to take several years to really start to see those markets heat up. Right now, there's a lot of testing and development among the vendor community, and some operators are testing those new approaches to the network architecture. It's really going to be a few years before you see that make an impact. We did some other studies. We're looking at, like, you know, 2015, where you're really going to see some meaningful revenue from those areas. But basically, let's just take a long-term view here. If you separate the intelligence from the network elements and you put all of that intelligence into a controller, the scope of maintenance that you'd need to be performing on the, say, edge routers and core routers would be a little less. Because right now you have most of the functionality and intelligence is in each individual network element. So if you're extracting that and putting it into a centralized unit, you're basically commoditizing the hardware across the network. And if that happens, like people are speculating that it will happen, again, this is going to be a multi-year, many years out transition for these things to really become pervasive. It could impact some of the pricing power that vendors have over the maintenance and reduce some of the scope that is required to maintain those network elements.
We might want to segue here real quick and talk, because we've had some questions around this. Maybe we can give an explanation about the methodology that we used to get all this data so people understand how we got there.
So methodology. So how do we get these numbers? So there's multiple ways that we get these numbers. The first thing that we do is take all publicly reported information on each vendor. We synthesize that, and we build a three-dimensional model for each vendor. We basically have created a P&L statement for each major business line within each of those top 5 vendors that we talked about in this. And we triangulate that against consolidated results. So in order to fine-tune the model, we use a mix of secondary and primary research. What we do is look at contract wins. So that would be on the secondary end. We look at publicly reported deals. We also do active briefings with each of the vendors. We talk to people from their services organizations, and we talk to them about what they're seeing in the market. We talk about things like pricing. We talk about regional things that are going on, how things like network modernizations are impacting margins, things like that, and that helps us give us directional guidance to our building our models. And then the other thing that we do is interviews. So we go out and we interview operators and suppliers, and we get an idea of what are the margin drivers, what, on a relative basis, what types of services are more lucrative than others, and why. And when we amass all of that information, synthesize it, we're able to vet this model and get to these margins.
Okay. Looks like we don't have any other questions in queue. So I want to thank you, Chris, and thanks everyone for your questions and for joining us today. As promised, here are all the social media links, and I do encourage you to reach out to Chris and connect with him on Twitter, as well as follow us on SlideShare and YouTube. I'm going to leave the chat function open for another couple minutes in case there's any last-minute questions that you have for Chris, or you'd like to set up additional conversations around this report, which is available now. If we don't hear from you again, this is a semi-annual? Is it a semi-annual report?
This is an annual report.
This is an annual report, so if you'd like to get access to this, please reach out directly to Chris. And if we don't talk to you today, you can look for our other webinars that are coming up over this summer. We'll be sending out all those information and the invitations and links to you in the next couple of days.
Yeah, and just we're doing another webinar in a few weeks on LTE market share. It'll be very interesting. We did a study a few months ago on LTE market share in 2012, and we did some forecasting for the next few years. Should be a very interesting webinar, and we hope you guys can join us. The invitations should be going out very soon.
Great. Thanks, everyone. Have a great afternoon.